Welcome. These sessions will be recorded. I'm pleased you could join us for the Business Education and Resilience webinars with 1917. My name is Pauline Markward, and I'm the Executive Director of the Greater Bowie Chamber of Commerce, which is made up of members with common interests and concerns related to the business environment in the Bowie area. It is the primary professional trade organization in the Greater Bowie area dedicated to the protection, enhancement, and success of business in the Bowie community. The Bowie COVID-19 Business Recovery Assistance Program delivers online technical assistance to help Bowie businesses accelerate their post-pandemic economic recovery. This program is a collaboration between the Greater Bowie Chamber of Commerce and the Bowie Business Innovation Center Business Accelerator and funded by the City of Bowie. During this webinar, it is best to be comfortable with your video on. Remember to mute yourself. Please ask questions through the chat unless otherwise directed. Joining us this evening is William Eric Lindsay, Senior Business Counselor of 1917. Thank you and welcome.
Thank you, Pauline. How's everyone doing tonight? Good, good. All right. Let me just do a quick share screen and I'll do a quick introduction. So as Pauline mentioned, my name is William Eric Lindsay. I'm the owner of a company called 1917, and we do business consulting and business coaching. Tonight we have part 5 of our Greater Bowie Chamber of Commerce webinar, Business Education Resiliency webinar series. But first, I need to say thank you to Pauline and the Greater Bowie Chamber of Commerce for allowing myself and my amazing team for putting on these webinars for the city of Bowie. I live in Bowie, so this is a really great honor for me. I'm really putting these business webinars on for the Bowie residents and business owners in the Greater Bowie area, not just in Bowie, but also in surrounding the city of Bowie. So thank you, Pauline, and the Chamber for working with me and getting my team on these webinars. So just a little bit about the Business Education and Resilience webinar series. This is a 2-section, 12-part webinar series, right? So we're putting 24 webinars together. Actually 25, but I'll talk about the last one shortly. This is actually session 5 of the 24 webinars, and this is section 1. What we've done is we've developed a programmatic approach. So one webinar builds upon the other. So if you weren't here for the first 4, that's okay. We'll continue and we'll keep building your business as we go through from webinar 1 to now. We started off with topics about goal setting, and we're going to always go into operational management, which we have Manny here tonight. We're going to get a little bit deeper into those aspects of your business. We're also going to have a federal government colleague talk about PPP and the EIDL program. And then the last webinar, which is actually the 25th webinar, that is the grand finale in July 15th, where we're asking businesses to volunteer and sign up for what's called a Pitch Your Business competition. That's where we, at the end of each section, I'll do a quick training on how to pitch your business and what your ask could look like and how to go through that process. So just be ready for that on July 15th of this year. Obviously, we'll select a first place winner who will receive a very wonderful prize that I'm working on with one of my team members who owns his own company, as Manny owns his own company. So we're all getting together and trying to figure out what this, well, you need to come and join us to get your first prize and do your thing and be selected in the competition. So since it's a pitch competition, my pitch for you tonight is to seriously ask you to sign up and return for all of the remaining webinars. Come back. The way we grow our businesses is just by continuous learning, and we learn something new from each other every single day. So it's always good to learn something from each other. So with that, I'm just going to say thank you for coming, and I want to introduce Manny Cosme. Manny is a good friend of mine. I've known him for many years. He's on the Greater Washington Hispanic Chamber. He's on the chamber board. He owns his own company, as you can see, CFO Services Group. He's an accountant. I've known him for a long time. He's going to tell you all about himself shortly. But Manny, take it over. I'm looking forward to your presentation tonight. You're on mute. Yeah,
I am on mute. Thank you.
you're on mute.
No, I appreciate it. Thanks for letting me present here tonight. This is my absolute favorite topic to talk to businesses about. So if you own a business and you're looking to grow your business and break through barriers and really achieve your goals, then you are definitely in the right place today, 100%. So I'm going to go ahead and share my screen. And we will commence with the presentation, which is going to be about guiding your business growth with financial projections, which again is my absolute favorite topic. So just a little bit, what I do is I do a lot of work with financial strategy. So really helping businesses kind of figure out what their goals are and how they're going to achieve them, of course, with a financial perspective. Because if you don't have a strong financial house, then your business is never going to grow and you're never going to achieve the goals that you really want. So this is really kind of the foundation to all the work that we do as a CFO. If you ever need some advice, some help, some strategy in how to grow your business with strong financial roots, the very first thing anyone's ever going to do for you is to help you create your financial projections. So this can be a pretty complicated topic. I really try to break it down into bite-sized pieces for you, but I just want to give you fair warning ahead that, creating a set of financial projections can be complicated. Businesses are complicated. There can be a lot of moving pieces in a business. And so trying to distill it all down to a set of projections can be tough. And that's where you want to work with a professional CFO to help you really think through all the different moving pieces of your business. So this presentation is hopefully going to be more of an introduction to the topic for you so that it maybe demystifies it a little bit. It gets you more comfortable with then maybe reaching out to a professional like myself and saying, hey, I saw this presentation. I understand the importance of it. I kind of see where you're going now. I'm a little bit familiar with it. Can you help me actually build out my projections and help guide me to helping me reach my goal? So that's really what I'm trying to do here. I am going to show you what projections look like. I'm going to show you how they're actually built. So there's going to be some Excel work here. I tell people, don't be intimidated by that. Don't worry about that. I'm going to, when this video recording goes out, I will give them a template that you can use to help build projections. So a lot of this stuff will be there already. So don't feel overly intimidated by that when we get to these sections. I just want you to see what this actually looks like as we build them, again, to demystify the process. So I would invite you to sit back, relax, maybe take some notes, and just kind of see what we're going to do here. In this, I guess a little over an hour we have to do this. And please ask questions. I'll stop periodically and say if there's any questions and whatnot. All right, so with that, I will say, so we're gonna talk about financial projections, and this is really important right now because there's a lot of uncertainty right now. I mean, there's always uncertainty with business, with small business, but definitely right now there's a lot of uncertainty. So projections is going to help to create more certainty with your business. It's going to help you not only understand where you're at, but where you're going, and then help you identify whatever obstacles may be in your way and what resources you need to actually achieve your goals. So let's get on with it. So first, congratulations. Congratulations on starting a business. If you already have a business, if you've been in business for a while, having a business is definitely no easy feat. It is, us entrepreneurs are a special group of people. And by the way, whether you own a for-profit business or a nonprofit organization, you're a leader in that, you started a nonprofit, it's still a business. So I just first want to congratulate you for doing the hard work, helping to build the economy, and for being here tonight and actually be interested in how to build financial projections. This is going to help you tremendously. So before we get started, let's talk about why you're here. So this statistic, it's my absolutely favorite statistic. I quote it all the time. So if you ever see me present, you're going to see this statistic. So according to Intuit, who are the makers of QuickBooks, 20% of small businesses fail in the first year of business. And 50% of small businesses fail in the first 5 years of business. So 1 in 2 businesses do not make it past their 5th year of business, which is mind-blowing. It's staggering. But the odds of success go up 89% if you work with an accounting professional. So in other words, if you work with an accountant, you have an 89% chance of actually making it past your 5th year of business. I mean, you're basically almost guaranteed making it 5 years. So what I'm going to do today is I'm going to guide you through the steps to take to build your financial projections. And as we can see here, there are 7 steps really to building a set of financial projections. So we're going to go through each of these steps in order, and I'm going to walk you through them. So the first one's going to be about setting goals. Then we're going to talk about your sales and revenue, your cost of sales, your GSA expenses, or what we call general sales and administrative expenses. We're going to talk about your cash flow, some scenarios, and then we're going to talk about how to verify the information. All right. So with that, let's move on to the first step, which is setting your goals. So, you as the owner of your business, the founder, if it's a nonprofit, if you founded the nonprofit, if you're a leader in the nonprofit, your goal is to set the destination for your business. What do you want it to achieve for you? And that question can be different for every person. I have some clients that want to build a multi-million-dollar business. I have some clients that just want to build a small business that provides them with a decent amount of income so that they can really relax and enjoy time with their family and whatnot. So every business is going to be different and they're going to have different goals. Not every business is going to necessarily want to grow very fast. Maybe they just want to achieve a certain growth. So your job is really to set the goal, the destination of your business. Then once you decide the goal, your job is then to position all the resources at your disposal to hit that destination. So we're going to position everything to be moving towards that goal. And then when you start getting off course, which inevitably will happen, you need to then reposition your resources. You need to identify that you're off course and then reposition the resources so that they're back on course to ultimately hit your goal. I think of it like a ship almost, where, a ship is moving through the water. It's the captain's job to not only decide where the ship's ultimately going to land, but then to course correct as the water naturally makes the boat turn left, turn right, and sideways and whatnot. The captain has to put the ship back on course and move them forward. So that's your job there. Okay, so we got to start with goals. And to figure out your business goals, we got to start with you. So to quote Alice in Wonderland, we're going to start at the beginning because it's a very great place to start. Okay, so we're going to start with you, all right, to decide your business goals. So this is all about you. So you decided to start a business because you wanted to fulfill personal needs of your own. So maybe you wanted to fulfill a creative desire, right? Maybe that's why you started the business. Maybe you wanted to make the world a better place. Maybe you wanted to cure a social injustice. Maybe it was to create a legacy to pass on to your children. Maybe it was to be rich, right? Maybe it was to make a bunch of money and retire early and live a fabulous life and all this stuff and enjoy the fruits of your labor and whatnot. So whatever your purpose is, whatever your reason is, that the thing that you want to achieve in your life, your business is here to help you fulfill it. Your business is a really great vehicle which you can use to ultimately hit whatever your desires are and create that life that you really want. A business is a fantastic vehicle for that. So that's what this is all about. And the goals that you set with your business, that's what they're going to be pointed towards. And undoubtedly, one of the purposes of your business should also be able to provide you with the income that you need in order to also hit your goals and enjoy your life. Okay. So as such, we want to be crystal clear on what your goals are for the business. So the first thing we're going to do is create your personal financial goals so that we can then map that to your business goals. Okay. So, for example, how much money do you need on a monthly basis to cover your essential bills? How about entertainment? Going out to movies, well, eventually, or dinner with friends and whatnot? Do you need to pay off student loans or debt? What do you need to put into retirement accounts? If you have aging parents, do you need to pay for their medical needs? Do you want a dream vacation or a second home or something like that? Okay, so these are things that you need to think about. What do you need personally? And then what we're going to do is we're going to use your business to help you achieve these goals. So these are great questions to explore with a personal financial planner, by the way. They're experts in helping you decide what you need in all aspects of your life. So I do recommend seeking out a professional financial planner and building a relationship with them so that they can help you think through these things. So let's take a moment and set some personal financial goals. So let's start with what you want 5 years from now. Don't start with where you're at today. It's actually irrelevant what your financial situation looks like today because you're going to be changing it. So because that's the whole point of owning a business, you're going to increase over time. So how much money do you want to be making? What will you be spending the money on? So it's important to tie the amount of money that you want to make to the amount of money that you want to spend. Otherwise, there's no anchor for your income desire. And then it becomes a fantasy and it's not really based in reality. So think about the money that you want and why you want it. Now, why 5 years? I always say start with 5 years down the road. Why 5 years? Because 5 years is just enough in the future to where your subconscious mind doesn't sabotage your desire for wanting more with the reality of where you're at today. So in other words, if you want more income, then your subconscious mind will tend to have a tendency to immediately jump in and say, oh, well, that's not possible because, here I am right now and this is my situation. And you'll defeat yourself right at the beginning. So instead, we set a goal that's just far enough in the future to where your mind can't rationalize away the possibility of not attaining that goal. Then it opens up your creativity to start thinking about how you're going to achieve that goal. And that's where creating a set of financial projections comes in, because we're going to figure out, well, what is your goal down the road? And then we're going to start mapping your business so that it achieves that goal. Okay, so let your imagination run wild. What do you really want in your life? So for example, maybe your goal is to spend more time with your family. So what does that look like? Well, maybe I only want to work 10 hours a week. Maybe I don't want to be tied to a particular geographical area of the country or of the world. Okay, so we're going to figure out what you want and what that really looks like. And then we're going to back up to where you're at now. So I actually have a questionnaire that I help people when I work with them go through. So I know this is being recorded, but what we're going to do is when the recording is sent out, I believe we can actually send out some of the questionnaires and templates I'm going to be showing you so that you can do some of these exercises on your own. So I would encourage you, when you get the recording, to rewatch this. And then in these moments where I say, take a look at the template I send out, the questionnaire I send out, if you have that, then at these moments, pause and take a look at that questionnaire and see if you can answer some of the questions. This will help you start formulating your goals and ultimately your financial projections. So once you figure out what you want in the future, now what we're going to do is translate those goals into money. So if I only want to work a few hours a week and whatnot, I want to spend more time with family and whatnot, well, there's a specific financial goal that has to be tied to that. I need to earn a certain amount of money in order to make that happen, right? So for example, let's say that in meeting with my financial planner and I figure out all my personal goals and whatnot, I determined that I really need $30,000 a month. Okay, maybe I have maybe I have a child that's about to go to college. Maybe I want a second home. Maybe I realize I need to put more money away for retirement, et cetera. So I meet with my financial planner, we do all the calculations, and we realize that really what I need is about $30,000 a month to hit all of my financial goals, okay? So what we're gonna do is do that and figure that out. Now, let me tell you, if you have more than one business owner in your business, it's really important at this point to pause and make sure that everyone that's an owner of your business or a stakeholder in your business does the exact same goal setting exercise. Because what I've noticed is that when you have multiple people in a business, if everyone has different goals for what they need to achieve out of the business, that's where the business starts going all over the place, and you end up with a lot of friction in the business, and you end up really, you can cause it to fail. So make sure that everyone in the business does an exercise where they become really clear on what they need out of the business, and then make sure that those goals are in alignment with one another, because if not, you could run into trouble. This is where a business coach can come in, by the way, and really help you guys sit down and understand what you need out of the business. Okay, so along with that, now let's translate your personal goal to business revenue. So again, let's say that you need $30,000 a month for yourself in order to hit all of your personal goals. What we're going to do is we're going to take that money and we're going to translate it into a business goal, into business revenue. So how much revenue do you need to achieve in the business in order to bring home that $30,000 personally? What we're going to do is we're going to use a very simple formula. We're going to take whatever you need to take home and we're going to multiply it by 4. And what we're going to do is we're going to say that that is your business revenue. So if I need to bring home $30,000, what I'm going to do is I'm going to multiply that by 4. And what that tells me is that my business now needs to generate $120,000 of revenue. Now, that's a very simple calculation. And it may or may not be the actual accurate number that I need to generate, but it's going to give me a starting point for a goal of where I want to at least start working towards to achieve. Then when we start building out our projections and we start monitoring over time, we can really start finessing that number to really hit what the accurate amount of revenue I need to generate is. So we're going to use that as a nice starting point, because we got to start somewhere with creating projections. So whatever your take-home goal is, multiply it by 4, and that's going to become your business revenue goal. So now we have a very clear goal of where we want to go, okay? And remember, I said this is a 5-year goal. So this is our first 5-year goal. So 5 years down the road, we want to hit, in this example, $120,000 of revenue. Now, we're going to start backing up our business's financial goals, okay? So we're going to start from 5 years from now, and then we're going to start working backwards. So 5 years, I want to achieve 120,000. Then what do I need to achieve year 4, year 3, year 2, and year 1? So year 1's goal is now going to be, that should say $40,000 in revenue. That was a typo. So my year 1 goal is now going to be $40,000 in revenue. So now we know where we're going to start achieving. So now we know, here I am this year. Now I know what I need to achieve next year in order to start putting my business on track. All right. And by the way, let me just say that goals are ever changing and growing. Especially as a business grows, you'll notice that it tends to grow exponentially. So it starts off kind of slow. Business starts growing slow, and then it starts picking up faster and faster. So don't overthink what you want your goals to be. They're going to be fluid and they're going to be ever changing. Most importantly is that you have something at least to start with so you can start moving towards that number. And we're going to be tweaking these goals as you move through time. A set of financial projections is not just a thing you do once and then it sits there. It's going to be something that you're going to be updating on a regular basis. So we're always going to come back. We're always going to see what is the new goal that you have. Maybe your life circumstances changed. What's your new goal? And then how can we map your business to start working towards achieving that new goal? Okay. Now, to complete the goal setting stage, we need to now back up and determine our starting point, right? So again, in order to start planning, so now we know, okay, well, we have our first goal. So we know our 5-year goal, which is 120,000. We back that up to our next year goal, which is going to be 40,000. So now in order to achieve our first milestone, which is at $40,000, now we need to back up and figure out where we're at today, okay? So this is now where we're really starting the processes. Where are we at today? So this can be tricky if you don't have good record keeping. Do you know how much revenue you generated last year? Okay, how quickly are your receivables converting to cash? What's your burn rate? What's your cash runway? What's your labor efficiency? So this is where having a good set of bookkeeping data really comes in handy. It's very, very difficult to create a set of financial projections if you don't have good numbers as your starting point. Where are you starting today? So if you need to, I would encourage you to pause and make sure that you get all your records up to date so that when you start creating your projections and mapping out your business, you have really good data of where you're starting so you can figure out where you're going. And then once you determine that you have good information, now we can start building our business. We know where we're starting and we know the goals that we want to achieve over the next few years. So let's get moving now, all right? And that brings us to step 2. So step 2 is all about now identifying your sales and revenue goals. So remember what we said is that our first goal is now going to be to hit $40,000 a month in revenue. But let's just say today we're only doing $20,000 in revenue. So today we're doing 20, but we need to hit 40,000 in the next year. So how do we get from A to B? How are we going to bridge that gap? So now we're going to look at that. So there are only 2 ways to generate more profit in a business. You're either going to increase your revenues or you're going to decrease your expenses. That's it. So decreasing your expenses is hard because as your business grows, it's going to require more resources. It's going to require more input. So you're going to actually be increasing your expenses as you grow your business. It's very hard to decrease your expenses as you grow. So really, the best approach to increase your business is to focus on the revenue side of the house. It's to increase your revenues. So when we work with clients, that's what I focus on. I don't focus on decreasing your expenses. I focus on how we're going to increase your revenues. So how do we do that? Well, we're going to start with where you're at today. So how do you currently make money in your business? What do you sell? How much of it do you sell? How much revenue do you generate on a daily, monthly, annual basis? Again, you have to have good data and good records in order to figure out where you're at. How much money are you making in your business? Okay, so we're going to start with that. Then you need to figure out, well, how is that information going to change over time? So over the next year, how do you think your revenue is going to change? Do you expect to gain more customers? Do you expect to lose customers? Do you expect to increase your prices? How is that going to change over the next year? So you need to think about that. And then what you're going to do is build your first set of projections for a 2-year period of time. Now, in order to think about that and answer some of these questions, I have a questionnaire that I put together that helps you ask you some questions to start thinking about what am I realistically going to be able to change revenue-wise in my business. So when you watch this recording, you will have that questionnaire with you, hopefully, and pause at that point and answer some of the questions to start thinking about what changes you want to make in your business, okay?
And we have a quick question, Manny.
Yes, go ahead.
The question is, does this mean possibly changing our business model in order to make room for increased revenue?
Absolutely, yes. In fact, I'm going to talk about that in just 1 second because that could be part of it exactly as your business evolves. So now this is the point where we're going to also start putting numbers into my favorite program in the world, Excel. As you build a set of financial projections, you're going to use a spreadsheet program to start tracking all of this information, okay? So that's why I have my handy dandy Excel spreadsheets here. And I'm going to show you literally how to build a set of financial projections. Again, I know that this is just a presentation, so I'm going to show you quickly what this looks like. Hopefully when you watch the video and you have the template that I'll send you, you'll be able to actually do this exercise. Okay, so just sit back, relax, kind of absorb what I'm doing. And then when you do it on your own, you can take it a little bit more slowly. Okay, so we're going to start with the blank spreadsheet that looks like this. And it's just going to have the name of your business. And it's going to have a bunch of months across the top of the screen here. And what we're going to do is we're going to build your financial projections month by month here. So you're going to really see how your business is going to change as you move through time. Okay, so we're going to start building this thing piece by piece. So to that question, we're going to add the sales data to your spreadsheet. Now, there are 3 types of revenue streams that a business can obtain, or there are 3 types of sales basically that a business can have. So there's recurring revenue, there's project revenue, and there's product revenue. So if you're a business, chances are, well, you have to have at least one of these 3 types of sales streams or revenue streams. The best businesses actually have a mix of all 3. So if you look at the strongest businesses in the world, they tend to sell things that produce a recurring revenue stream, a project revenue stream, and a product revenue stream. So a recurring revenue stream is something that you sell once, but it keeps producing revenue over time. So a great example of that is like a subscription, right? I sell this thing once. So I go through the sales process once, and then it just automatically renews. And let's say every single month or every single, iteration of time, I automatically get money into my bank account because the service continued, right? Subscriptions and whatnot. The interesting thing about that is that when you have a recurring revenue stream, what you have to track is when you're going to gain new customers and when you're going to lose new customers, or what we call churn. So over time, you're going to gain new customers, you're going to increase your revenue, but you're also going to lose people. And so those are some things you have to track. Okay. With project revenue, this is something that you sell as a one-time thing, and then you fulfill it over time. The nice thing about this is that it can bring you a lot of money at once. So I sell a big project and it brings me a lot of money at once, and I fulfill that service over time. And then when it's done, it's done. So then I got to go sell it again. Okay. So that's project revenue. Product revenue is I create something, maybe something tangible, or it could be a video maybe, or something like that. And I sell it. And when I sell it, it's fulfilled immediately. So I sell it at the point of sale, basically. So if I am a baker and I bake cookies and I sell them, those are products. Okay. Maybe I make videos and I sell them. Someone buys it, it's fulfilled immediately. What that does is it creates the ability for you to scale your business really fast, because you create something and then you can sell it over and over and over again. Okay, so the best businesses have a mix of all 3 of these types of sales. And so to the question of, well, as I decide what revenue goals I need to hit, do I need to change my business model? This could be the point where you're actually changing it, is understanding what am I selling now, and do I need to sell something different in order to achieve my goals for next year? So once you figure out what you need to do, then we're going to put it into a spreadsheet. So we're going to start with all of the ways that you make money. And what we're going to do is on the left-hand side here, we're going to list all the ways that you generate revenue. So in our example, we're going to use a burger joint, Acme Burger Joint, okay? And so we're going to figure out, well, if I'm Acme Burger Joint, how do I make money? Well, let's say that, well, I sell hot dogs, hamburgers, and ice cream. So those are products that I sell. But let's say that I also, because I'm a good business owner, I also have project revenue. So let's say that I also sell catering projects. Again, that's a one-time thing that I can sell. It brings in a lot of money, but when it's done, and I got to go sell it again. And then let's say I also have recurring revenue. So I really thought hard and I came up with a meal subscription option, which we're seeing a lot of these days. So I can have customers subscribe to a meal subscription. And what I do is every month as I go along, I can add new customers to that subscription model, but eventually I will lose customers as well. So we're going to track how many new customers did I get this month? How many did I lose? So how many current customers do I have, et cetera? And this is what we're going to start tracking here to track my revenue. Okay. So that's an example here. So let's say that, this is the data here. So I had 5 new subscriptions. I lose 1 subscription every month. So I'm going to think through over the next year, what do I think my sales are going to look like? Now, as a business owner, you do have to sit back and kind of figure out, okay, well, I understand my business. I kind of have a sense as to what I think I can achieve in my business. This is where having good data is really helpful. I can look back at maybe the last year or two and see, well, my sales were kind of moving in a certain direction. So based on that, I think what I can do is I can probably get 5 new meal subscriptions a month. Maybe I'll lose 1 subscription a month. Maybe I'll get, 2 new catering projects a month. Maybe I'll sell 1,000 hot dogs per month because this is what I've been doing, right? So this is where it's really helpful to have a good CFO professional sit with you to kind of maybe think through, well, what do you think your business can really produce for you? And then we're going to put that all on a spreadsheet. So this is what it looks like when you fill out this sheet. We're going to look at all your revenue streams and we're going to think about month by month, what do you think you can sell? I think I can sell 1,000 hot dogs a month. And I sell them for $5 each. So this is the amount of revenue I can generate for the hot dogs. Ice cream, hamburgers. How many catering projects do you think you can sell? I think in March, we're going to sell 1 catering project because that's typically what we do. And we usually sell them for $5,000 a project, okay? So now I can start putting numbers and start thinking about how my sales are going to move through the year. And that's going to help you start putting together your revenue projections. Okay.
I have a quick question, Manny.
Yeah.
The question is, would memberships be considered recurring or project?
Yeah. So memberships, because you sell it once and then it automatically renews, hopefully. So, month over month, you're basically automatically reselling it. So that is absolutely a recurring revenue stream. So we're going to put that down on paper. Okay. And now, so that's sales. Now what we're going to do is then translate the sales into revenue numbers. So this is a kind of an important distinction here. So let me explain this. A sale is a moment in time when the contract is signed, basically, right? So the contract is signed, the food is ordered, the transaction literally occurs, okay? But revenue is the moment in which the money from the sale is legally earned. So for some businesses, sales and revenue happen at the exact same time. If I sell a cupcake in my bakery over the counter, then the sale and the revenue happen at the same time. It's not like they're signing a contract for a cupcake and then I'm fulfilling the cupcake down the road, right? But for other businesses, like let's say you do a long-term project, there may be a difference in time between the sale and the revenue. So I only mention this because for some businesses, that becomes really important because the way your cash flows into your business may be affected by the sale versus the revenue. So if you have a business that your sale occurs at a different time than the revenue, you may really need to sit down with a CFO professional to help you really think about how the cash is going to flow through your business. It's a little bit more complicated. If you have a business where the sale and the revenue take place at the same time, it's a little bit easier to project everything. So what we do for sake of completeness is that we first figure out our sales and then we translate that into revenue. So typically, again, if the sale and the revenue happen at the same time, then there's really no difference between the sale and the revenue. But if there's a little bit of a lag in time, then your revenue is going to look a little bit different. So for example, just to make sure this makes sense, if I sell a catering project, maybe I sell it today, but I don't fulfill that for 2 months down the road. So the sale happens today, but the revenue will happen in 2 months. So your revenue for your catering projects is going to look a little bit different than your sales. That will become important when we look at the cash flow. So I just mentioned that when we go to the cash, that will hopefully make a little bit more sense. All right. So after we do our revenue projections, now we're going to look at the costs. So what we're going to look at here are the direct costs. And this is the money that it's going to take for us to spend in order to actually generate that revenue that we're making. So there are three types of costs that are generally incurred by a company. So we have labor costs, we have resale inventory, and raw materials. So labor is probably going to be your biggest cost, and that's the cost of your people actually producing the thing that you sell. And every business has labor costs. Pretty much no matter what you sell, at some point, some human being is touching it and doing something with it. So that's the labor cost. Then we have resale inventory. If you buy something that you turn around and resell, then you're going to have resale inventory costs. That's the thing that you're buying that you're reselling. And then we have raw materials. If you manufacture something, then you're going to have raw materials that you purchase and then you transform into the finished product. So the general rule is the higher the revenue you have, the higher that cost is going to be. Okay, so that's why first, when you create your projections, you need to understand what revenue you're going to have first. Then you can figure out what costs are going to be associated with generating that revenue. So for that to make sense, again, when you get the recording of this, I have a questionnaire that asks you some things to help you think about what those costs are going to look like so that you can start putting that on paper and think through, well, this is what I generate in revenue. These are then the costs that I need to incur in order to generate that revenue. And then how is that going to change as I increase what I sell? As I start moving towards my sales goals and revenue goals, how are my costs going to change along with that? And then we're going to plot that all on the spreadsheet. So now we're going to add, so now we have our sales section, we have our revenue section, and now we're going to add in a new section for our costs. Okay. So in our example, in order to produce meal subscriptions, catering, hamburgers, hot dogs, and shakes, we need a few different costs. So we need to hire line cooks, which are labor costs. We need to hire servers to serve the food. And for our catering projects, we need to order raw beef so that we can cook it and sell it. So that's raw materials. And then maybe instead of we don't make our own ice cream. Maybe we buy ice cream already made and resell it. So then we buy ice cream that we turn around and resell. So these now become the different costs that we incur in order to generate the revenue that we generate. Okay, so again, in our example, here we go. So we have cooks, servers, ice cream, and beef materials. And then what we need to do is we need to figure out, well, how much does it cost then every month in order to generate what we do? Now, this exercise, because we don't have enough time to dive into it, this will take a little bit of thinking to think through, well, what does it really cost me in order to generate, to sell the thing that I sell? So maybe what I need is I need to hire a certain number of cooks, and it costs me $2,000 a month in order to hire a cook. But one cook can only generate $10,000 in sales. So these are the things that you need to start thinking through. And again, the questionnaire that I have will help you think through that. You know, what is the capacity for your labor, basically? If I have a server, I pay the server $1,500 a month, and they can generate basically $15,000 in catering sales. Ice cream costs me $5 per pint, and I sell half a pint per sale that I sell. It costs me $10 for beef, and it takes a quarter pound of beef in order to produce a burger. So these are now the costs that I add into my projection spreadsheet. So again, we really think about kind of what does it cost me really to produce the thing I sell? And then we lay that out in the spreadsheet here, okay? So we can see here that it costs me $2,000 to hire a cook plus some payroll, taxes, and benefits and whatnot. And in order to produce the amount of catering sales that I generated, I actually need 2 of these people in order to produce that. Okay. And so on and so on. If I'm going to sell a certain number of burgers, I need a certain amount of beef. How much beef am I going to need? And then this is the total cost that I'm going to incur. So as I look at my sales, I can then determine how much input I need in order to generate that sale. Okay, so now we have our total cost, and that's how we start putting together all this information. So again, when you're watching this video, pause it here and start thinking through all the inputs that you need in order to generate that sale that you sold. Okay. All right. So now we're going to move on to the GSA expenses. So GSA expenses stand for General Sales and Administrative. And really what you can do is you can think of this as your overhead, basically. So you have in the last section, we looked at your cost of sales. Those are your direct costs that you incur in order to generate the thing that you sell directly. So for example, I have labor that literally produces the thing I sell. Okay. But you also have other expenses that are in the background of your business and they help your business run. So we call these general sales and administrative expenses, or again, you can think of as sort of overhead in a broad sense. So these are the things that, again, help the business move forward. So we talk about sales and marketing because they're not generating the product or service that you're selling, but it's supporting the business overall. It's helping you generate those new sales. So we have sales and marketing, we have management, which is the management of the business, and then we have general overhead, which are all the other expenses to the business, okay? Like insurance, legal fees, office rent, kind of things like that. All right, so when we think about these expenses, we can think about them in terms of fixed expenses versus variable expenses. And if you've ever taken an accounting class or an economics class, you'll probably recognize these terms here. But this is very important when you think about creating a set of financial projections, because you need to understand how your expenses are going to change as your revenue changes. Remember, your goal is probably going to be to increase your revenue over this next year, over these next 2 years, over the next 5 years. So as you increase your revenues, how are your expenses going to change along with that revenue? So if you have fixed expenses, then your expense is going to stay the same even as your revenue grows or shrinks. Now, remember, everything is variable in the long run, right? Because you can always get rid of your office, for example. But in the short run, it's really hard to change fixed expenses. So no matter what your revenue changes over the next few months, your office rent, for example, is going to stay fixed. It's not going to change depending on what you sell. Variable expenses, on the other hand, pretty much move at the exact same time as your revenue moves. Okay, so you need to kind of figure out what type of expense you're dealing with for all the expenses that you have. And so again, I have a questionnaire that helps you really think through what all that means to identify whether a revenue is fixed or variable. So here's some examples of fixed expenses versus variable expenses. I keep saying revenues. Fixed expenses versus variable expenses. So you may have some of these expenses in your business right now. And again, it's important to understand which one is which so that as you do your projections, you can then figure out how your expenses are going to change. Okay. So we are now going to plot again all this on our spreadsheet. So we're going to start now. Now we're adding a new section, and now we're going to add all of our GSA expenses. And again, we're going to split them by category. So we have our GSA sales and marketing expenses, we have our management expenses, and we have our overhead expenses. So what are we going to incur in each one of these categories? And then we're going to add these numbers into here. So we can see now, this is what I expect to spend in each one of these categories month by month by month. Okay, so we can see, for example, I expect to spend this much money in accounting month by month. I expect to spend this much in insurance, my lease, supplies, etc. Okay, my CEO salary, make sure you put your payment in there. Very, very important. Make sure that you get paid in there. And then we're going to see now what we're going to expect to spend month over month. And now, once we do that, now we can finally see what our projected net profit is going to be. Okay, so now we can take our revenue minus our cost of goods, minus our GSA expenses, and now we get to our net profit. And that's the number that we really want to look like. What is my business going to look like now as I move through time? I set my sales, which translated into revenue. And then I figured out, in order to achieve this, these are the costs I need to incur. And these are the general sales administrative expenses I have running in the background. And when I put all that together, this is the net result. This is the profit or loss that I'm now going to generate. Okay.
Hey, Manny?
Yeah.
Hey, I just want to be sure that the Excel spreadsheet shows up on your screen. Are you seeing it? We had a question in there that it's not being shown on the screen.
I see it. You guys don't see it?
No. Could you share that screen? Maybe that there's a Zoom technical issue there.
Oh.
That's it. There we go. Yeah, now we see it.
There you go. Okay, there you go. Okay.
Thank you, sir.
There it is. All right. So we can again see that. Well, let me show you again then. So again, we have our sales, which translated into revenue. Then we figured out what costs it took to generate the revenue. And then the GSA expenses, which are running in the background. And all of that shakes out to finally what our profit is. Okay, and we can now see our profit month by month by month. This is what you need to see as a business owner. You need to understand what your profit's going to look like now, month by month by month. And if you see any trouble area, this is where you can start taking action. All right, so that's where we're at now. Can you see my PowerPoint again? Okay, cool.
Yep, we can see your PowerPoint.
All right. All right, so now that you know your net profit, that's really great. But we're going to move on to step 5, which is your cash flow. Because while knowing your profit is great, that doesn't necessarily translate to cash you have in your bank. You need to also understand, as a business owner, how much cash is coming into your business and going out of your business on a regular basis. Revenue does not mean that cash is coming into your bank account. And expenses don't necessarily mean that cash is going out of your bank account. There can be a difference in timing there. And so as a business owner, it is crucial that you know when your business is going to go flow, when your cash is going to go flow in and out of your business. So I like to say that cash flow is like a roller coaster. As you grow your business, there's going to be periods of time where you're going to be cash rich, and there's going to be periods of time when you're cash dry. Now, the reason for that is because as you grow your business, you need to increase your capacity, which means you need to increase your costs. As you increase your costs, your revenue don't necessarily immediately jump up when you increase that capacity. So it takes a little bit of time for your revenue to catch up, so you can start selling more. So because of that, as you grow your business, there are periods of time where you may go cash negative, where you're not bringing in enough money, cash into your business to cover all of your costs. So this is why it's very important to do a set of financial projections so that you know when you're going to hit these periods of time. You know when you're going to hit these low periods where you're going to be low on cash, so that you can start strategizing about what you're going to do to get through those periods of time. So we're going to start with your profit projection. So we're going to say, okay, well, this is the profit that I expect to generate this month from my business. And then what we're going to do is we're going to adjust that profit to get to what your cash then looks like. So there are a couple typical adjustments that we make to translate profit into cash. So for example, receivables. If you do invoicing, you sold something, right? You sent your customer an invoice. Doesn't mean they necessarily pay you right then and there. How long does it take for them to pay you? Maybe it takes only a few days. Maybe it takes a few months. So I need to know that if my profit number says I sold X and now I expect, I generated a profit technically from that for this month, the cash may not come in because it may take them a few months to actually pay me. So I need to then adjust my profit for those receivables that I'm not going to collect right away. Okay. Maybe payables. Maybe I'm not paying all my bills right away. Maybe I can pay those down the road, particularly if I'm putting a lot of my expenses on a credit card. Technically, in my profit number, I incurred an expense. I had to pay office rent, but maybe I just put it on my credit card. So that's not cash coming out of my business right then and there. The cash is going to actually come out of my business down the road. So that's something we're going to adjust. Maybe you have loans. Maybe you took some equity draws and whatnot. Okay, so we're going to adjust all these things in order to get to what your actual cash is for the business. And again, I have a questionnaire that walks you through some questions to think about. So in our example here, let's just say that we make a few adjustments and whatnot, and we end up with our cash flow here. Okay, so we're going to jump back into our spreadsheet. And now we're going to add this next component, which is cash flow. So as you can see, the projection spreadsheet is starting to show a really comprehensive picture of our business. We know our sales, we know our revenue, we know our costs, GSA expenses, profit, and now we know our cash flow. Now, based on the profit, now I can start predicting how much cash I actually expect to be in the business. So we have all of our cash inflow. So we start with, well, this is what I sold. This is how much money came into the business. But maybe I'm taking out sales not collected. So maybe I technically sold a catering job here, but they're not paying me right away. They're not paying me for a while. So I have to take it out of my cash because I'm actually not going to be getting that cash in the door this month. Okay. Maybe I'm not going to get it for a few months. Maybe I got some deposits from some customers because maybe I sold a project and I asked them for a deposit up front and they gave me that deposit. So that's money that's coming into my account this month. Cash outflow. Okay, these are the expenses I incurred, but maybe some of them I'm not paying right away. Maybe I have a loan that I need to pay back. And so I need to figure that into my cash outflow. How much am I paying back on that loan and whatnot? So we figure out month by month how much cash is actually flowing in and out of our business to get to the cash out, to get to the net cash flow. Then we say, okay, well, this is my beginning cash. This is how much cash then came in and out of my business. And so now I can end up with an ending cash balance. This line right here is extremely important for you to be watching as a business owner. How much cash do you expect to have month over month in your business? This is really what it all boils down to. Okay. Now, if you start seeing a negative number, like going back to this sheet here, if you start seeing a negative number like here, 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 and here and whatnot, that's your clue that you need to start strategizing, because what this is telling you is that you're going to run out of cash. So you need to start figuring out now what you're going to do in the months when you're going to start running out of cash and you're going to end up with a negative cash flow. Typically, what that means is maybe you need to go get a loan or a line of credit from someone. So you don't want to wait until the uh-oh moment when you start seeing your cash depleted. You want to start that process now because you know it's going to happen. And this is where the power of projections comes in. It's all about anticipating what's going to happen with your business so you can strategize now to bridge these gaps down the road. All right. Okay. Then the last two things we're going to do real quick is we're just going to set up some different scenarios. So now that you've created your first set of financial projections, now what we're going to do is just create some different scenarios. And you can create, of course, the worst case, likely case, and best case scenarios. So, probably what you created was the likely case. Then create a case where maybe your sales aren't so great, right? Maybe you didn't sell as much as you thought you would. So create a worst case and then create a best case where you really just knock it out of the ballpark. Maybe you're able to sell a lot more than you thought you would. What is that going to look like? Again, you may want to work with a professional there to help you figure out what those cases would look like. And then what we're going to do is just in our financial projections, we're just going to create different tabs. We're going to take the one we created and we're going to label that likely case. And then we're just going to copy it over and we're going to adjust the numbers a little bit. And we're going to create a worst case and then a best case scenario. Again, just so that we understand kind of where our business is and what could happen, both good and bad in our business, so we can start anticipating what our needs are going to be. All right. And that's how we create different scenarios in our business. Now, the last step of the process is finally to verify all the information that you just did. So you just made a lot of assumptions about your business, but you have to do something to start figuring out where you're at and where you're going to get to. So now you need to make sure that that your business is actually going to be achieving the goals that you set out to obtain, and make sure it's on track to fulfill those goals. This is now one of your top responsibilities as the business owner or the leader of the nonprofit. So you need to be updating your personal financial goals on a regular basis to first make sure that those goals are still accurate for you, okay? The goals you had when you first created these projections may be different now as you're looking at it over time. So continue to update those personal financial projections. And then you need to do a sanity check every few months to make sure you're still on track to meet those goals. Look at what your business is producing and look at your goals. Are they actually still helping you achieve those personal goals? This is part of the recurring work that you need to do in your business. And then you need to do this process all over again. So updating creating your business projections is not a one-time thing. It's something that you're going to do continuously over time. You're going to reassess your personal goals and then remap your business to achieve those goals, and then adjust everything to then make sure that you're still on track to hit those goals. So what new revenues do you need to hit? The assumptions that I made originally with my business, were they accurate? Did they actually come to fruition, or did I make some wrong assessments in my business? These are things that you need to do constantly to make sure that your business is on track. Again, a business is like, going back to that ship analogy, you're going to be moving through the water and things are going to be moving you all over the place. And so you need to constantly bring your business back in alignment with where you ultimately want it to go. So this is something you're going to be doing over and over and over again, and really just making sure that your projections are reflecting reality of what's going on.
So we have a quick question, Manny.
Yep. Well, that's actually it. So, yeah.
Perfect timing. Perfect timing. So we actually have. I just want to go back into the chat. One person asked, "How do I schedule a one-on-one Q&A session about the PPP application?" Just wanted to touch base with you, Manny, on that topic. Could you talk about what CFO Services does specifically for PPP applicants?
Oh, sure. Well, let me finish this real quick, and then I'll go back to that. So, sure. Financial projections is complicated, as you can see. Again, my goal here was for you to hopefully be able to sit back, kind of get a general sense as to what the process is. So it demystifies it a little bit for you. I would encourage you to rewatch this video and then go through the templates that will be provided to you so that you can really start thinking through this stuff alone on your own, and then reach out and ask for help to really create these projections so that you can see where your business is at today and where you want it to go and how we're going to help you get it there. All right. And we do have a financial accelerator program that I like to talk about that's really designed to help you also create these projections. So what we're going to do in here is we're going to not only teach you how to create good records so you know where your starting point is, but also then how to create your projections so that you know where your business is going, and then help you monitor that on an ongoing basis so that you are really hitting your goals there. So if you're interested in that, definitely please ask about that, and just know that you will succeed. So remember that 20% of businesses don't survive past their first year, and 50% don't survive past their fifth year. But if you create a set of financial projections, you're going to be able to see exactly where you're going. You're going to be able to see any obstacles in your way, And because of that, you'll be able to pivot around them and actually hit your goals, and then you will succeed. So, all right. So now I can
There we
answer.
go.
All right. So PPP. So if you're interested, switching topics on PPP, we're offering free assistance for people who need help in doing the PPP application. So just jump on our website, cfoservicesgroup.com, and sign up there for one of our free clinics on that.
Yep. And that is info at CFO Services Group. That's also application for your newsletter, correct?
Yes. So if you're also interested in getting financial advice on a regular basis, we have a monthly newsletter that goes out where we give financial information, some financial advice, some things to think about. So feel free to please go on our website again, cfoservicesgroup.com, and fill in a contact form or fill out a sign-up form for our newsletter. I'm happy to put you on that and give you some updated information. We're also constantly doing workshops and webinars to really drill down into these specific areas to help you really think about your business and how to achieve your goals in your business.
And a question back to the Excel spreadsheet. The question specifically says, if you can speak to the net profit line in Excel, doesn't this matter as much as cash on hand?
So yes, I mean, the net profit, so the net profit ultimately translates into cash. So yes, it's important. The thing with the small business is that the number one resource that you have as a business is going to be your cash. And the reason why, if you look at the reason why most businesses fail prematurely, is because they run out of cash. They have a certain goal that they're trying to achieve, but they didn't necessarily realize the amount of cash it was going to take for them to actually get there. Remember that as you grow your business, it's going to cost you more and more money to grow, because as you grow, you need more and more resources and you need to pay for those resources. But as you grow, your revenue or the money coming into your business does not necessarily grow as quickly as the cost that you're going to incur to grow that revenue. So as a result, businesses tend to start running out of cash. So as a small business who's growing, it's very, very important to watch that cash line really carefully so that you can anticipate when you're going to be running out of cash, if and when you're going to be running out of cash, so that you can go figure out that problem now. So yes, of course, profit is important because that literally tells you what the fruit of your labor is, right? This is what I sold. This is the expense I incurred. So you want that profit, but that profit doesn't necessarily translate into cash right away. In fact, there's actually a really great, there's some really great examples of businesses that have actually sold themselves into bankruptcy, where they actually sold so much product so quickly that they didn't have enough cash to actually fulfill those sales. And they ended up having to file bankruptcy because they ended up with all this debt. They basically sold all this stuff, bought the materials to make the stuff, but then couldn't pay for those materials, and then ended up filing for bankruptcy because the money from the sales that they made didn't come in fast enough to then pay all those bills. Mm-hmm. So there's a mismatch sometimes with the timing of cash coming in and coming out. So that's why you have to really watch that cash line.
Well, also, Manny, in previous webinars for the chamber, and also, even with my clients and the clients that I work with, one of the things, because of COVID, we're still in the pandemic, that obviously changed our financial projections almost immediately. Even from a month to month, you talk about looking at your financial projections. One of the things pre-COVID, we used to tell our clients, and I'm sure Manny did the same thing, was the question was about net profit. But when you get to net profit, there's gross profit prior to that. You always want to be sure you have a savings. You want to make sure your savings you want to save some money for your business. That, let's just say, your monthly overhead is $5,000. What I used to tell clients, and Manny, you speak on this as well, is I used to tell clients pre-COVID, have at least 3 to 4 months of savings of your yearly overhead. So if your overhead was, let's just say $1,000 a month, have in the bank as savings for your business about $4,000 a month. Now, because of COVID, because of what we saw last year, and because we're still in the pandemic, I've been telling everyone, ain't project for savings for 1 year. Definitely do 1 year. I mean, I'm not saying save 1 year in 1 month. I'm just saying if your overhead's $12,000 a year, then start saving $12,000 per year, just in case we end up in a situation like this. So that, just wanted to add that comment. And we have two more questions.
Very true.
For the Startup Financial Accelerator program that you mentioned in your previous slide, is there a year in business requirement or preferred year in business to be part of that program?
No, actually, that's a great question. In fact, we have some businesses that are actually, they haven't really started yet, or they're just at the beginning of starting. So it's really helpful to, one, make sure that you are building strong financial records right from the beginning. So getting you in QuickBooks and starting to create your financial records, very important. But two, also to create your first set of financial projections. Think of your projections as your business plan, basically. Again, it's going to show you kind of where you're at today, which may be zero, but where you want to get to. It's going to help you think about what goals you need to set in your business. What revenue do you need to achieve in your first year of business, in your first 5 years of business? And then what resources is it going to take for you to achieve those goals? So realistically, how much material do you need to buy? Do you need to hire labor? What other inputs are you going to need in your business? What about the overhead that you're going to need in your business? How much cash are you ultimately going to need? That's a big question for a startup business, is you may not necessarily really know how much cash you need. So you're just starting going out there and just as much cash as I can possibly get. Well, you can sit down and really figure out how much cash you need. And then you can start approaching a bank or, investors and whatnot with an exact number of what you need. And that will actually help you fundraise.
Yep. Great point. Great point. Another question that we have, and this is more for Pauline, where are the recordings? Once the chamber records these webinars, where can attendees find them?
Hi, wonderful. Thank you for asking. You can go on to our website at the chamber, buoychamber.org, and underneath the tab BBR, you'll find them there. You'll also find them on YouTube. There is a YouTube channel for them also, and I believe it's titled Business Educational Resilience Webinars. Or you can just call me or email me, and I can help you find them.
Cool. And there's a comment that says, based on what you just said, Manny, it says, thank you, that sounds great. As I'm trying to build and add other streams of income this year and next year.
Cool.
Yeah, so that's actually, it's a great program to jump in. So if you're thinking about expanding your streams of income, that's something that, Manny and I also work together on with these businesses is, especially during COVID, especially last year. Manny can share a lot of stories about, not just the pivoting story, but how businesses reimagine their business plan and reimagine their streams of income within the same structure of their current business license, and just trying to rethink things. So, Manny, you can also jump on that as well.
Yeah, I mean, we have a whole exercise that we go through to help businesses think about diversifying their revenue streams. As I said way back towards the beginning of this, there's 3 types of revenues that a business really wants to have. It's recurring revenue, project revenue, and product revenue. The more streams you can develop, the more revenue streams you can develop along those 3 lines, the stronger your business will be, because each one serves a particular purpose in your business. And when times are tough, when the economy is down, people tend to buy more product-based stuff than, let's say, project-based stuff. And so if you have a business that has multiple revenue streams and different types of revenue streams, you can more easily pivot when the economy changes to really maximize on that. So for right now, the economy is in kind of this weird place, doing big projects is a little harder to sell right now. And so if all you do is sell big projects, you may be having a difficult time. But if you can sell big projects and then turn around and package that as little products as well, that will help you get through these moments in time. So, and then if you can turn around and make a recurring revenue stream out of it, then that's even better, because then you don't have to worry about selling it over and over and over again. You can just focus on one sale, sell it, and then start getting the revenue over time. So anyway, there's a whole exercise that we can go through to really help you think through what that means and how you can apply that to your business. But very, very, very important right now.
Yeah, this is great, Manny. Thank you for all that information. Yeah, there's much more that we can get into, into your specific case. So if everyone can just, reach out to Manny, reach out to the services group, sign up for the newsletter. I definitely get the newsletters every month, obviously, and I also work with Manny with clients as well. So reach out, especially for the PPP, because he's also doing free PPP assistance as well. So take advantage of that. And, if there's any final questions or comments, please, put them in there. And Manny, can I share my screen just for a few minutes?
Sure, yeah. Thanks, Corietta. She sent me a message saying,
awesome.
Been on once. Thank you. I appreciate that.
All right. So I just want to say thanks, Manny, for doing this. And this isn't the last time we are going to see Manny. I'm going to share my screen real quick. Yep. So this is actually a great segue when you talked about the PPP, Manny. You talked about the EIDL program. Next week, next Thursday, same time, same channel, same place. We're going to have Mr. Roderick Johnson. He's the SBA official that will be coming and speaking about the overview of the Paycheck Protection Program and the EIDL. So you're hearing it directly from the SBA official who has done a tremendous amount of work in this field, working with Congress, and working with the White House and putting these programs together. If he's one of the best people to actually come and listen to in terms of what's happening here, in terms of PPP and EIDL. He'll definitely give you, just the latest and greatest information that you'll have on. Bless you, Pauline.
Thank you. Excuse me. I thought I was on mute.
You're fine. You're fine. Bless you. To talk about the PPP and the EIDL. But I also want to highlight something. This is Manny's first session tonight. Manny's coming back in May. Remember I told you there were 2 sections? Well, Manny is coming back in section 2 of the 25 webinar series. He's doing a back-to-back QuickBooks session.
QuickBooks.
Yes. So we're getting into the really operational aspects of your business. So he does this regularly for his business. He has a lot of bookkeepers and accountants that we help each other in terms of the clients. QuickBooks is a huge tool, and he's giving us 2 sessions back to back on basic QuickBooks and then advanced QuickBooks. So write these dates down and obviously invite friends and family and your fellow business owners to these sessions. If you don't come to any other session, which I think you will come to all sessions, of course, but come to these on May 6th and May 13th, where Manny will be back talking about the software that's used in accounting. So I'm going to stop sharing my screen. And that's it. So with that, I just want to say, Manny, thank you so much. Thank you, everyone, for listening. Thank you for your amazing questions. Let me see if there's anything here in there. Okay.
Exit polls.
We have one more thing, which is the exit poll. And don't go anywhere just yet. So Pauline, I'm going to hand it over to you. Thank you.
Okay, thank you so much, Eric. Thank you, Manny. And thank you, everyone, for joining us today. And if you could take a moment, please, and answer the exit poll questions. It allows us to know where we did well, where we can improve ourselves. And again, another informative webinar from 1917. Eric, wonderful. Thank you. Manny, so much information. I'm glad we're recording these so we can always go back and look at them. And now more than ever during the COVID-19, we really need business plans. So thank you again so much.